This piece did create a lot of talk yesterday, I think from both directions that might have differences with your approach. But describe, if you could, what you are saying relative to the kind of standard view that Howard Schultz articulated there, that the government debt burden is this, we're going to hit this reckoning point, this point of no return, and we have to prepare for that.
Yeah, look, I mean, Howard Schultz obviously knows how to run a good company. His company, by the way, has $10 billion in gross debt off of annual earnings of about $5 billion. So, I'm not running around saying he has too much debt. When you look at the U.S. Federal government, just look at financial markets. Interest rates are really, really low. The markets are telling us something, and it's not something new. It's not something recent. For a while now, interest rates have been trending down, and that's a little bit of a barometer of how concerned we should be about the debt.
So essentially, the interest burden, the outlay that the government has to essentially, allocate for servicing the debt is basically around the long-term average. You say, therefore, it's not something to worry about. But you also think the market is going to tell us when it would be time to worry?
Yeah, look, I can't tell you for sure, that we're never going to have to worry about the debt. I think we have a lot of problems in our country. I wish we had lower debt right now. I wish we hadn't, added a lot to our debt with the tax cut last year. But we are where we are. And what I'm saying is I don't think this needs to be our top priority right now. I don't think we should obsess over this. Don't make it worse. Don't keep adding to it with unpaid for stuff. But if you don't do that, we can focus on the other issues in our country for now, and then if we have to come back to this, we can do that.
Jason, the flip side of the low interest rate debate has been that these historically low levels have actually fueled the government to go on a spending spree. What are your thoughts?
I don't agree with that at all. First of all, we're not on a spending spree. If you look, spending over the last couple of years has been stable and even fallen as a share of GDP. We've been on a tax cut spree. That's something we've been doing for a while. But if your interest costs are lower, you can afford to carry more debt. And so the right amount of debt for the country looks higher now than it used to. The last thing I'd bring in here is health costs actually have come in below expectations and are expected to grow a lot more slowly. So, people have long been worried about entitlements. Entitlement growth is a little bit less than what people were worried about a decade ago.
And Jason, you have this critique of people who say, look, this $21 trillion in debt is an urgent problem. On the other side, there is, of course, this theory that's gotten more attention, modern monetary theory, where there's a perception that what it is saying is, in fact, the government can have an almost limitless amount of deficit spending and debt if they have reasons to spend that money on the population. I guess it's been either credited or blamed for creating this conversation to rethink exactly what the borrowing capacity is of the government. Where do you come down on that?
Yeah, I don't think modern monetary theory is a particularly good theory of anything right now. And if it's being interpreted, as some do, as a license that you can just do whatever you want and don't have to worry at all, I would disagree with that. I think we need a limiting principle. When you do budgeting, you need some way to decide, this is worth spending money on, that's not worth spending money on. And, I think some simple common sense idea, like if you have a new proposal, you should pay for it. That would be hard enough for Washington to do. It would be an improvement over what we've seen lately. But, it wouldn't actually lower our debt. It just would make sure we're not making it a whole lot worse.
Jason, debt crises seem to happen suddenly. I mean, one minute nobody seems to care, and the next everybody seems to care, and you're dealing with ramifications of it very quickly. I mean, would you agree with that?
No, I think debt crises are the most predicted crisis we have in our country. If you look at countries that get to borrow in their own currency, that print their own money, it's exceedingly rare to see a debt crisis. Countries like Japan, operating with a lot more debt than we have in the United States. Again, I don't think we should get our debt up to Japanese levels. I think that would be a mistake, but I think the problem here is more of a termites in the woodwork chipping away at our economy a little bit over time, not a crisis.
not when interest costs on the debt exceed any other expenditure of the federal government, which is not inconceivable
Like
even in the next few years.
You know, again, I'd rather have lower debt. If I had a choice, I'd have lower debt rather than higher debt. But there's a cost to reducing the debt. You have to give up on some other things that you want to do. A year and a half ago, Republicans in Congress made the decision that, you know, they thought that a tax cut was more important than reducing the debt. I think that was the wrong decision, because I think that was a poorly designed tax cut. But you know, this is about prioritization, and I don't think of all of the problems we have in our economy, this is the one that's keeping me up at night right now.